The global financial crisis of 2008 had impacts across the world that are still being felt to this very day. It was a serious hit to the finances of dozens of countries, thousands of institutions, and billions of people, and generally, the more financialised a country was, the worse it fared. While most of the attention was on the USA and its failing banks, there was one country that felt the brunt of this crisis more than any other. Iceland lost nearly half of its economic output over just 2 years, making it one of the most catastrophic economic hits to an advanced nation at any time in history. The impact of the GFC on nominal economic output in Iceland was 10 times more severe than in the USA, and it wasn't exactly like they were having a great time either. Now, there's a lot that can be learned from such a severe economic failure, but what's even more interesting is the almost unbelievable comeback story the country has had. What would have been a complete death blow to most economies, and what has been a turning point for most of Europe, is now little more than a memory for this tiny country. Not only has it fully recovered from the GFC, it's gone on to become one of the wealthiest and most productive economies in the world. So, what has been behind the remarkable recovery? Could this success be replicated in other economies? And finally, is this new round of success sustainable? Managing money isn't just for governments, it's something that we all need to master. That's why we're excited to work with Trading 212, a platform designed to help your money grow instead of losing value to inflation. Here's the easy part. Just holding your money in a Trading 212 account earns you 3.7% interest, no complicated steps, your money works for you. If you work between multiple currencies like euros or Australian dollars, Trading 212 has your back with exchange fees capped at just 0.15%. That's money saved right there. And when you're ready to invest, their Pies and Auto Invest tool makes it simple to build a diversified portfolio. You can even follow strategies of top investors, copy them, tweak them, or create your own. Whether you're new to investing or a pro, it's all about growing your wealth the smart way. Want to give it a try? Sign up with code EE, deposit any amount, and you'll get a free fractional share worth up to €100. Check out the link in the description. Start building your financial future today with Trading 212. In the years preceding the GFC, Iceland was already deeply entrenched in the money markets, going all in on banking and financial services. And to be fair, they were far from the only country to join the frenzy leading up to 2008. And following the subprime financial crash, most of the modern world suffered devastating losses. It's just that for Iceland, they had gone all in. With low industrial diversity and a historically volatile currency, it might not have known it yet, but Iceland was about to be the most devastated victim of global greed by an insane margin. In fact, by the end of 2008's second quarter, perceived risks and a drop in investment caused Iceland's external debt to rise by over $53 billion, which isn't much compared to a lot of countries today, but it's also important to remember that Iceland is tiny. It has a total population smaller than a lot of large suburbs in the USA, so this was an astronomical amount of debt per capita, and it had primarily been used to build a financial sector to make it the Singapore of the Atlantic. With such a small population, it's hard to be competitive in a lot of traditional industries, but of course, with the benefit of hindsight, it had embraced the wrong business at the wrong time. This debt had become so unmanageably large that its central bank backed out as a lender of last resort to save banks from a cataclysmic fallout. Even more shocking, in contrast to most Western countries that swooped in to save these institutions, the Icelandic government basically washed its hands of it, allowing the banks that participated in this race to fail. At the time, this was extremely controversial, leading to a financial battle with the Netherlands and the UK that ended up with a ruling allowing Iceland to not be responsible for Dutch and British minimum deposit guarantees. They did, however, guarantee these deposits domestically while securing a $5.1 billion loan from the IMF and its Nordic neighbours for the slow, highly regulated restoration of their shattered banking system, actually arresting a good number of key bankers in the process. Iceland's overzealous attitude towards unregulated banking crushed them during and after the GFC, with its debt to GDP ratio peaking at 130% in 2011. Back then, this number was actually unusual. They had even requested to join the EU at around about the same time, but in light of recent events, the EU put this request on hold because they were dealing with meltdowns all over the continent, and Iceland was very seriously staring down the barrel of becoming a failed state. But by 2016, it was almost like nothing ever happened. Just 5 years after the peak, the country's per capita GDP returned to pre-crisis levels, and its debt to GDP dropped by more than half by December of 2023. And much of this really has to do with the unique nature of Iceland. It still struggles today with a different type of volatility, but in a weird way, the causes for its highs and lows are often the same reason it was able to recover so quickly in comparison to its Western neighbours. It's the 18th largest island in the world with a boundary of 103,000 square kilometres, and even though that's a decent amount of surface area, its population is minuscule, about 394,000 at the time this video has been uploaded. Iceland also has a very low GDP, sitting at roughly $31 billion US. All of this doesn't really seem that impressive, which in some way contributed to its experience with the GFC being overlooked. However, the few things Iceland does do well is more than enough for its modest size. Even though the country seriously lacks industrial diversity, the fact of the matter is that it really doesn't need that much. And what it does have, well, it effectively makes up for anything it might have needed if it were anywhere else. Geography is on their side. In a series of conflicts with virtually no casualties, aptly named the Cod Wars, Iceland vastly expanded its territory by sea, and although fishing exports rose and fall, they still contribute to take a considerable profit, over $2.5 billion US in 2023, accounting for 25% of the country's total exports. This is impressive and all, but it doesn't really explain how the small country has managed to sustain world-leading living conditions in contrast to even its European peers with world-leading industries. What really puts Iceland in a special position is energy. And this energy, which has made Iceland a world leader in some respects, is almost entirely renewable. The country has about 37 large and 200 smaller hydroelectric power plants, with the construction of these starting in the 20th century, and more to be built in the foreseeable future. While around the same time there was another source that they'd harnessed, originally used by farmers to heat their homes, now used on a much larger scale: geothermal energy. The electricity is incredibly cheap, making Iceland's energy bills only reach an average of $30 US per month, which is quite impressive given how much heating is required during periods of extreme cold. Using both energy sources to their advantage, Iceland produces more electricity per capita than any other country on Earth, which is only expected to grow in the coming decades. Economic output is almost perfectly correlated with energy use because wealthier countries both consume more energy to power more comfortable lives, but cheap energy is also a huge advantage in industrial capacity. Being one of the most geologically active regions in the world, Iceland heats almost 90% of its homes with direct use, and the power source also contributes to food production like fish farming and greenhouses. But what makes this power source truly valuable, especially on the world stage, is how it lends a hand to the process of the world's most energy-intense industrial applications. The first is aluminium smelting. The process itself involves dissolving alumina, adding anodes, applying an electric current, and siphoning the molten aluminum so it can be cast. Of course, being an economics channel, this is a simplified explanation. Basically, all that needs to be understood for now is that aluminium requires a hell of a lot of power to be produced, twice as much as iron. When looking at countries that do the same, it becomes clear why Iceland has a promising future. Today, the gold medal for aluminium production goes to China, accounting for about 60% of the world's smelting capacity, yet it does appear to be hitting a bit of a ceiling. This is because a country like China has to rely on coal-fired power and natural gas, which has damaging effects on the environment, as well as fossil fuel just being an additional cost that makes their production more expensive. Iceland, on the other hand, doesn't have this same problem. Because geothermal is a renewable energy source with the heat being used constantly replenished by the Earth's radioactive core, Iceland could theoretically rely on this energy output for billions of years, and once geothermal plants are established, their ongoing costs are far lower. They can also just build more geothermal plants to provide power to the growing industry, which they are, with more drilling expected to take place between 2025 and 2027. Another interesting use for this industry and the endless energy it provides that has become extremely popular in recent years is cryptocurrency. While cryptocurrency has received a lot of heat given the mining requires a tremendous amount of energy, Iceland stands as one of the only examples where the practice is not only sustainable, but the country faces no ethical backlash preventing operations from scaling further like others that rely on non-renewables to achieve a fraction of the output. Now, whether or not this success is sustainable, well, yes and no. Having cheap, reliable energy is always going to be a huge advantage for any economy, and it means that it can easily be competitive in a range of industries. So, even if its small labour force focuses on one, they always have backup options. Case in point, AI has become the growth industry of the last few years, and it's also dependent on huge data centres that consume incredible amounts of energy to operate. Some companies are literally recommissioning old nuclear power plants, and most of them are just burning fossil fuels, but Iceland, with its far cheaper and more socially accepted energy source, is becoming a popular destination, helped a lot by its position between the two largest economic centres on the planet, and the fact that it has a very safe, stable government. Effectively, their geothermal power is just another natural resource that can be exploited for huge monetary gains, but it also has two significant advantages over something like oil. The first is simply that it won't run out, not before humans run out anyway. But the second reason is that it can't be sold. Now that might sound like a disadvantage, but hear me out. By not being able to turn a profit by simply loading this resource onto a ship and selling it off to some foreign energy company, Iceland has almost been forced to develop domestic industries to cash in on their natural resource endowments. This means that instead of just becoming another case of Dutch disease, it's been able to use its energy resources in a way that is less efficient, but does require real activity in the domestic economy. So yeah, it has a lot of advantages. But the fact is, even with its small population, the country still relies rather heavily on contributions beyond its borders. By no exaggeration, they really couldn't be the success story seen today without it. And this has nothing to do with the support they received after the GFC. The aforementioned greenhouses and sustainable growth systems might export around $234,000 worth of something like fruit, but it imports around $9.28 million just to provide its residents with a balanced diet. And this doesn't even include grains and vegetables. Everything from ships to motor vehicles to pharmaceuticals to the components they use to smelt aluminium, like carbon electrodes, comes from another country's available supply. Even fish, the resource that Iceland relied on before the 20th century, has become a major import for the island, importing fillets from Germany, the UK, the Netherlands and the US, with additional live fish from Spain for stocking. And because it's well known for its scenic beauty and hot springs, tourism has been a major driver of the Icelandic economy for more than 3 decades, employing about 20% of its population and contributing to almost 10% of its GDP. Flights between America and Europe are often cheaper when making temporary stops in the country, and it's basically a spa day in between destinations with added benefits, but maybe not including culinary achievements. Also, tourism was one of the 2 major contributors to the country's economic revival following the crash, aside from restructuring its banking system, but it also made Iceland one of the most tourist-dependent countries in the world. Going all in on another fickle and globally dependent industry really hurt the economy during the coronavirus epidemic, and the only thing that really helped them weather the storm was the lesson they'd learned, as well as the industries mentioned earlier in this video. And then there's the question regarding whether or not Iceland is a replicatable success story or a blueprint for similar countries that want to bounce back from their own mistakes. And the answer is no, not really. The fact of the matter is, Iceland is a resource state, just in a less obvious way. They arguably just got dealt a lucky hand, and a lot of the benefits have to do with size and location. The country is too small to be a reliable economic model for other countries. For example, it welcomes several times more tourists every year than its total population. That just wouldn't be possible in a country like the USA. Plus, the geothermal gold mine that the nation sits on is well outside the reach of most other countries, although it is an industry that is being taken more seriously even in places where it's not as easy to access. But to replicate Iceland, conditions literally have to be next to perfect, needing the necessary volcanic activity and the heat sources, as well as the means to drill deep enough to draw fluids from underground reservoirs, heated by the Earth's core to drive the machinery capable of generating electricity. It's not something that would be feasible on most of the planet. Technically, this is another great benefit for Iceland as well. Their source of energy can't really be copied by a majority of hopefuls, and their inability to transport the systems elsewhere creates a stable and long-lasting employment opportunity for those who live there year-round. And as far as lessons go for Iceland's economic journey, the only one to be found is that unregulated and outsized financial sectors often risk crippling otherwise profitable countries. It could be argued that imports come and go, but as long as the country has something to offer, it truly is self-sustainable. With responsible institutions and investments where it counts, at least for Iceland, there's nowhere to go but up. Now, the only other country that really has harnessed its resource wealth better than Iceland is arguably the channel's little darling, Norway. We have made an entire video on their recent resource findings, which have made them one of the wealthiest economies in history. You should be able to click to that video on your screen now. Thanks for watching, mate. Bye.